Hello traders, welcome to yet another episode. This is the weekly outlook, and it has been quite time before I recorded another video. So I want us to look at what we expect in this coming week from tomorrow, that is date 8th of June 2026 to date 12th, that is on a Friday. So after the last week, that is the week that has just ended, we have had a lot of movement, and after a week dominated by NFP and major USD volatility, traders are now asking one question: where is the liquidity resting next, and where do we expect price to move on the majors, that is the DXY, the EURUSD, the Pound USD, and the gold? So we are going to look at each one of them, and then this, I hope you'll find it helpful and very educative. So remember, disclaimer, this is not a financial advice, and Forex market is a high risk market, so all risk management strategies must apply. And again, this is not a financial advice. So we are going to start from the DXY. This is just my analysis that I already done, but you can clear this and start once again. Yeah, so we are going to start from a monthly perspective, and what we see here is that from a monthly perspective, we have already taken out this sell side liquidity here. As you can see, we took out those lows at this point, and as you can see now, we are at above the previous month high. So our next draw on liquidity is this buy side liquidity here. We can mark that as buy side liquidity, and then we also have this high here, which is also our draw on liquidity, which also becomes our buy side liquidity. Yeah. Then we also have this. We can also be targeting this fair value gap here. We have this fair value gap, which is a bearish fair value gap also. All these are draws on liquidity. So from a monthly perspective, we want to see now this is our first target, and then we can either come here and here, or to this extreme fair value gap here. That is on a monthly perspective. So on a weekly perspective, last week, as you can see, last week you can see price, we are reacting from this weekly bullish fair value gap. As you can see, we have our bullish fair value gap there, and you can see this is where we are reacting from. So our next drawn liquidity on a weekly perspective is here, as you can see, so which is a monthly high also, and also here. So for this coming week, what we expect is to see, because we are bullish on a weekly perspective, we want to see an open low high close candle, which is a bullish candle. So what I'll be wanting to see is, I'll mark the 50% of the previous week, the 50%. I don't want to see any candle closing. That is the I want to see price reacting from the 50%. So this is our 50% zone of the previous candle, which is the equilibrium. So if we close below this, I want to see our low being formed around this place. Yeah, that is in DXY. So we can go down to the daily time frame and see. You can see here on the daily time frame, we have this. We have been in this accumulation here, and we returned. We are reacting also from this fair value gap here, which is also the weekly fair value gap. You can see we are reacting from there. We swept liquidity and we closed above this series of down close candles, giving us an order block there, which is a CSD order block. And then, so what you expect, and you see on Thursday we came and retested this order block and we reacted from this and we closed above. So this is where our 50% or the equilibrium of the previous week lies. So what I want to see price coming to this point and going up. For more clear for more clarity, I can go down to the 4 hours. I think that one is a little bit better if you're framing it with the weekly. You can see here we have this order block at this point because we closed above this series of down close candle. You have an order block there. You can see we left a very huge fair value gap here, which is also lies within the 50%. This is the 50% of our weekly candle. So remember about time frame alignment. If you're using the weekly candle as your higher time frame, you're going to use the 4 hour as your intermediate time frame. So what we want to see is that price to retrace either to this order block here, to continue high, which is also within the 50% of the previous week candle. So at this point is where I'll be framing to see my reversal. So I expect an open low, high close candle. This is our first draw on liquidity. Yeah, so that is on DXY. We can go down to the GBPUSD. I had already done my analysis, so I'm just going to take you through what I saw. I don't think there is need to clean that. As you can see, from the monthly, we are going to start from the monthly perspective once again. You can see here from the monthly perspective, we took out this buy side liquidity. Let me hide the drawings so that you can see. So we took out we took out these highs and we reversed, and you can see we are reacting from this monthly. We took out external range, came back to our internal range, and now we came back here. So the month of May, we took out previous month high and crossed inside the range of April. So we expect to see now these lows being taken out. Now this is our first draw on liquidity because you can see we are bearish from monthly perspective, and perhaps we can also come up to this. We can come for these lows here also, and then from there we can either retrace to our internal range. So this is our first draw on liquidity from a monthly perspective. So we expect our this month we expect a bearish candle also. Down to the weekly time frame, as you can see, again we have this fair value gap in which we are reacting from. You can see last week we swept the last week of May. We reacted from this weekly fair value gap, as you can see. So we took out the high of this week, tapped into this fair value gap, and closed inside the range of the previous week. So as you can see now, from this we are able to continue to react from this fair value gap, as you can see. So this week also, my target is, this will be my first target, this will be my first drawn liquidity, this low here, and then this one, and then perhaps up to this. So this might take time, but this is our first target from our weekly. So we expect an open high low close candle from the weekly perspective. So I like to use the weekly and the 4 hour because I think for me it's a bit clear, but we can just look at the daily. From the daily perspective, you can see on Thursday we traded as an inside bar. Then on Friday we came and took out these highs here. We took out these highs, we swept those highs, and this high also, as you can see, and we closed. We had this order block here, which is a CASD, and we also have another CASD here. Let me remove this. Yeah, I think it's a bit clear now. You can see we have this series of up close candle, and this is where we got our daily CASD. We closed below that and returned, tested that, we swept, and then we had another now order block here, which is a daily. So what I want to see now is a retest of this. I want to see a retest of this, then we continue downwards. So that is from a daily perspective. Let me go down to the 4 hour. The 4 hour for me it's a bit clear. You can see we have our 4 hour here, changing state of delivery, which is our CASD block, and you can see we left a lot of imbalance from we have this fair value gap here, which is a 4 hour bearish fair value gap. So what I want to see for this coming week is a price to retest this order block and continue downwards. We might have an inducement here, so to trap traders, so you need to be careful and wait for confirmation. And again, it's not a must price to retrace up to this point, so we can have some. You can also have SMT with EURUSD, so you can have something like this. This is just an inducement, and then you have the rain move there. Yeah, so you can have something like that. So you just trade or you just wait for your confirmations. So I expect either Monday to retrace, and then Tuesday or Wednesday. And remember, this week you also have the CPI. So on Wednesday, so we can have a great move from Wednesday. So we can see Monday, Tuesday retracing, then on Wednesday it continues with our trend downwards. This is our first drawn liquidity, and then this one will be our second target. So the reason I want price to reach here is because you can see how price respects for our order blocks. You can see at this point we have been reacting to this 4 hour order block here. You can see that price retraced to it and we reacted from it. So I want to see price coming up to this level, and this will be my highest probability trade, because the way I trade the 4 hour, price usually respect 4 hours PDRs depending on what I have realized. Yeah, so that is all on GU. Down to EURUSD. For EURUSD, again we start from a monthly perspective. Let me clear this for clarity. Monthly perspective, you can see we took out these highs. It was a liquidity sweep, and then we came down to this, took out this also. After taking out that, we took out that was another liquidity sweep here, and then we took out, then we retraced back to there is a high probability here. There is a PDR. It can be a weekly or a daily PDR where price reacted from. And then you can see now last month we traded as an inside bar. We neither took we didn't take April highs or lows. You can see this candle here is an inside bar. So this month we expect price to come down up to this. We can come down to take out this liquid. These are first drawn liquidity. This one here. This becomes our sell side liquidity. Sell side liquidity. So we can come up to this level also. But from a monthly perspective, you can see we are strongly bullish. We are bullish, and this is just, we had a little bit of a consolidation here. I'd also want to see price, whether we'll tap into this. You can see we have multiple fair value gaps here. You also have this and this. We have just mark them as one. We have these bullish fair value gaps from a monthly perspective. So we can come up to this level, which is at discount level, before we continue the uptrend. But for now, from a monthly perspective, our bias is bearish. So we can go down to the weekly to be more clearer to see. From a weekly perspective, you can see we are reacting from this tiny weekly bearish fair value gap here. Bearish fair value gap, yeah. And then yeah, so I think we have some sort of an SMT, if I'm not wrong. No, we don't have. Yeah, so you can see last week we closed very bearish, so we expect now this week we continue bearish also. So I just mark the 50% of this weekly candle. This is where I don't want to see price closing above this 50%, which is the equilibrium, or the equilibrium, the weekly equilibrium. So I want to see price reacting from this. So we can go down to the 4 hour for more clarity. I like to trade the weekly and the 4 hour, but before that we can look at the daily time frame. The daily time frame, you can see we had this CSD block here. We tapped into this daily fair value gap also, which is within the weekly fair value gap. It gave us this CSD block, which is a change in state of delivery. CSD block, we came and retested this order block, and you can see here on Friday we reacted from it. And you can see here we also have some SMT with GPB, because you can see GPB took out this high and also this high, while EURUSD we didn't take out this high, so giving us an SMT. So for this coming week, we also have another daily order block there, CSD block. So I want to see this coming week. I'm also bearish. I want to see an open high low close candle, which is a bearish candle. So this is our first drawn liquidity from a daily perspective. Yeah. So down to the 4 hour. So down to the 4 hour. So remember, if you are doing time frame alignment, you want to do, if you're using the weekly candle as your higher time frame, remember your intermediate time frame is your 4 hour, and if you're using your daily time frame as your higher time frame, your 1 hour is your intermediate time frame. So for the 4 hour, I want to see something like this. You can see here you have this change in state of delivery there. You have these multiple fair value gaps. These ones, you can mark them all as one. So I want to see now price, and this is the 50%. Remember, this is our 50% of the previous week, which is at at a good level. So I want to see price. And the way I trade is I want to see a swing point, a 4-hour swing point being formed. So I want to see something like this, open, price to open, and then come to this level, then we continue downwards. I want to see something like this. At this point is where we're going to form our swing point. So I want to see also a candle 2 closure, 4-hour candle 2 closure. So, and then I'll be looking to trade the C3 and the C4. So if you're wondering about that, you can refer to the videos below. You'll understand that. But a C2 is a swing point. Yeah, so that is all for Euro USD. And it comes to gold. For gold, you can start from a monthly perspective. We have been bearish, and you can see we have been bearish for the last since March, April, May. Now we're in June, and we continue the bearish move. So our first drawn liquidity from a monthly perspective is this. This is our sell side liquidity. I mean this. Let me clear that. This is our first drawn liquidity. Weekly perspective, you can see also we're also bearish. Last week we closed below this level, and then you can see the previous week we took out this high and closed inside the range. So this week we closed below previous week. The previous week we closed below the previous week low. So we are still bearish, and this is our drawn liquidity. So I like to pair. I like to pair the weekly and the 4-hour. So I'm just going straight to the 4-hour. So for this coming week, I'm still bearish for gold, and this is my first target here. But you need to be very careful. Yeah. So just go straight to the 4-hour because I've already established my bias. And one thing I like about gold is the way it respects 4-hour PDRs that are at a discount level. You can see from this, the previous can see we came to this fair value gap here. We reacted from it, which is at a premium level. We sold it from there. So gold respects this 4-hour. You can see all these fair value gaps that I've marked. You can see another one here. From this leg, from this high to this high, you can see at a premium level we reacted to this fair value gap once again, and we sold off. So the same for this week. You can see also we reacted from this fair value gap. In fact, gold has been respecting these 4-hour PDRs. So for this coming week, you can see we left a very huge fair value gap here, and we also have this changing order block here. So for this coming week, we also have this also. For this coming week, I want to see an open high, low close candle. I want to see some retracement to this level. Then you can continue to our target. So I want to see something like this, an open high, low close candle. Sometimes you can get some inducement here, so you need to don't get trapped to the wrong move. So you can see price retrace, then makes an inducement, and then it comes here and then makes the real move. Yeah. So, and the fact that we have CPI this coming week, so you need to be careful about the same. So this is our target here. And this is also a psychological level, so 41,100. So you can see this is where the price reacted from this. So this is also a psychological. So when we are learning about liquidity, we have liquidity that is created because of psychological levels, because something like 41,100, 42,100, 44. Like these numbers that are easier to these are psychological levels. 45, 5K, those are psychological levels. So I want to see something like this. And so just remember, this is not financial advice. And always remember to follow your rules. Always remember to apply risk management, and adapt to changes, because sometimes you can find the market, especially after this impulsive move, you can have some consolidation, and you just want to wait for your confirmations. And at the same time, you can open the week with some gaps on either side. You can have some price, you can open with a gap up to this level, and then we just continue, or you can open with a gap on the downside. So you just need to be careful. Yeah, so I hope you found this educating, and may you have a wonderful time. See you in the next one. Remember to like, comment, and subscribe. um, in case you have any question, I am free to discuss with you. I am free to discussions. I don't charge anyone anything. If you want to learn, I'm not mentoring anyone right now, so you can just ask your question in the comment section. Thank you for your time, and see you in the next one.